Welcome everyone. Welcome everyone. Just waiting for the numbers to tick up. Everyone's just sort of just coming in, and I'll do the introductions. Um, yeah, they're just ticking up quickly at the moment, so I give it a little while longer. I'm sure no one's going to want to miss anything. Yeah, yeah, it's still going up.
I mean, a couple of weeks ago, we had a conversation worrying whether we'd have enough to talk about on this because we thought, well, if they just put income tax up a couple of percent, we've got nothing really to say.
Which is why we did a pre-budget one just in case.
Yeah, I think the problem is that we've got too much to cover almost now.
Yeah, I'm just looking down the list of names. Still going up. Still going up. I think I'm going to start. It is still going up, but it's sort of plateauing. Right. Welcome, everyone. I'm Matthew. For those who don't know me, I'm Matthew Doney. I'm a tax partner at Bevan Buckland. I've got with me Gus, who's our CEO. Um, I'm gonna I'm gonna sort of deal with the kind of the boring bits, if you like, but the necessary bits. Trying to explain what's happened, what effect it might have. But I'm going to hand over to Gus to give a bit of an introduction, a bit of bit of context to this smorgasbord of tax changes. Do you want to start?
Um, yeah, I mean, I try not to get political, and I'm certainly not ideological in these things, but my sort of reaction to today's budget is one of a headache and genuine. I'm not someone who gets headache very regularly, but I have a headache from having spent the last 6 hours reading Treasury and OBR documents. I think the everyone I've spoken to and all the messages I've received, I think is fair to say at best underwhelmed. Um, some people, I think there was a hope that there was a best hope that business will just be sort of left alone in this budget. And and I think there was a real argument for that because of the NI rises, etc. Last time, we just wanted we wanted a quick budget, not much in it, a couple of straightforward things, and everyone can get on with their lives. And it wasn't that, unfortunately. Um, and I don't think this is just this Labour government. The last 6, 7, 8 years, this has been the pattern of budgets, which they get longer and longer. They're very long lists of things which you've got to spend a lot of time trying to figure out and work through as to what they actually mean, both on the spending and the tax side. And unfortunately, it's sort of been more of the same. And I don't know the big question, the big question about this budget has always been: does this draw a line under the fiscal and tax uncertainty that governments have been under really since COVID and probably since before those. And I think the general feeling is it hasn't. I don't think anyone is sitting here thinking, right, that's good. We're definitely not going to be back here in 12 months' time thinking about what other tax changes are going to get put through. Mainly because, the government is still going to be running deficit for the next couple of years, and it really only makes itself good in the last couple of years of this sort of spending review period. Um, and that's due to a huge number of assumptions. And even the OBR report, which was hopefully published before the budget, highlights that there are a huge amount of risks within that OBR forecast. So, I and actually, what on the BBC after when they started doing their analysis, I think the first government minister on the second question they asked him was exactly that. Does this mean you don't have to come back in 12 months and raise taxes again? So the fact that that question was being asked straight off this budget tends to suggest to me that that question hasn't been answered in a way that businesses can just draw a line, move on, fiscal certainty, right? This is it. This is the tax system for the next few years. I know what I'm doing, and sort of let's get on with it. So that's my sort of
And Gus, those forecasts were more positive than we were expecting. So
yeah.
hence having that headroom and that uncertainty in the OBR report is even more important because they were more positive than we were expecting. So they don't need to move very much for that fiscal headroom, which is greater than it was going to be. It was 10 or just under 10. I think it's now over 20. but it doesn't take much for that fiscal headroom to disappear. And then, as you say, we're back in
You're
next year.
talking fractions of percentages and changes of your
Mm,
assumptions have huge impacts several years out. And I'm reminded of the BOE used to put out an inflation forecast chart, which had, I think it had 5 scenarios on it, and they used to constantly update this. And it basically meant the Bank of England was forecasting that inflation could be anything from 0% to 10%. And you
yeah.
just thought, well, what's the point? You don't really
And so,
know.
so you have to
And
think that the press conference that Rachel Reeves did, which was preluding a increase in the basic in the rate of income tax, 1%, 2% across all the rates. And that didn't happen, presumably because the OBR forecasts are a bit higher. And so if they come back, it must be in their minds that when they need to, they will increase income tax.
yeah, and look, it's not, you're not, to give the comparison of running a business, you're not running a business to try and sort of, you know, maximize your sort of future gains or whatever. It's almost like running a business, right? Well, in 5 years, I've got to hit this target, right? How do I just, you're not hiring and spending and setting your prices based on just the pure reality of decision making today. You're trying to hit some made up target 5 years in the future. And so the main, and I was on a call with Treasury giving this reaction, and I was probably a bit more brutal than some of the other um, people on that call. But what they've done today is they've just given everyone, and I suspect everyone on this call and all of us, and particularly you, Matt, a massive headache of having to try and figure out how all these things potentially impact everyone individually. And because it is, I think there are 16 tax changes that come into effect immediately, if I remember rightly. Um, so those are going to impact every business slightly differently. So there is we can't sit here and give, right, this is your answer, this is what you need to do. Everyone running a business has got to look at that and trying to figure out, well, what does that mean? Does that impact me? Do I need to change what I'm doing? So just when your big issue is confidence and certainty, I honestly, my honest opinion of this budget is I don't think it delivers any of that. But that said, I think this was clearly a political budget written not with us business owners in mind. I think it was written, it's this cost of living and affordability stuff, which it's all a bit of political nonsense, really. Um, it's written in mind with the broader electorate, but I just don't think it will land with the broader electorate, and I think frankly, it will just piss off a lot of business owners.
Yeah. We'll go through the changes,
Yeah.
but I have to caveat this with typically when the budget, when the Chancellor sits down, normally all the tax information notices are released. And so you listen to the budget and you hear the sort of the headline detail, and then you go and find the TIN, as I would call it, and you find out the detail. Incredibly, none of sorry, not none of them, but very few of those have actually been released. So everything I now say is with the caveat of actually I'm working with the sort of the scantest information. So we'll go through I won't catch I doubt I'll catch everything, but we're gonna go through the key changes. So fiscal drag, salary sacrifice, tax rates on savings rates and rent, corporation tax allowances, electric cars, high value um, property council tax, ISAs, bit on business rates and a bit on EOT. So if we've got to start with we knew about fiscal drag, so just freezing up the
Sorry,
personal
sorry, Matt.
allowance.
Just before we do kick into those, the one which I think set the tone this morning or yesterday for a lot of business owners was the national minimum wage increases, and particularly the 16 to 21, which is going up, what, 8% on the back of 16%
Mm.
last year, which is just insanity in Wales. When the NI and the mash, the issues that we've got in Wales are the weakness in the entry level job market, and it makes it so difficult for any business to make decisions that they're going to hire someone junior in an entry level, because the cost of, not just the direct cost of hiring them, but the fact that you need experienced people to train them. They're not very productive for a while. That, I think, that set the tone this morning amongst a lot of the people I was speaking to, suddenly thinking that, oh, this isn't going to be good.
And I think it's worse than that because if you've got if someone who's not on minimum wage see someone more junior having an increase as a consequence
Yeah,
of the national,
it all pushes
it
up.
flows through the organisation and can cause more grief in terms of
Yeah, and look, and it's
budgets.
nonsense to think that someone living down in Southwest Wales has the same living expenses as someone in Birmingham or Manchester, and yet the minimum wage is the same in both places.
So let's catch on let's touch on the main thing. So freezing of personal allowances has been extended out to 2031, which I think will mean that we've had the same personal allowance and basic rate and higher rate of tax, or will have had by the when the freeze supposedly ends for 11 years, which we just could not have expected that 11 years of them being the same. Um, that is what it is. I think the pension salary sacrifice. And this is an interesting one because essentially this is a situation where if an employer makes a pension contribution, there is no national insurance on that. If the employee makes it from their net income, there is income tax relief, but there is still NI. Both the employers and the employees pays NI contributions. And what we used to do as employees, not always, but typically they could sacrifice, say, a bonus. So rather than making out of net pay and therefore suffering the NI, they could avoid the NI. What's quite interesting about this is and particularly for the clients that are on this webinar, I don't think that's necessarily going to impact owner managed businesses because they're not sacrificing salary. If they decide to pay themselves the basic salary and decide to award themselves a £60,000 annual pension contribution, and one year they might contribute 10, another year they might contribute 60, it's not technically salary sacrifice. So it'll be interesting to see how that actually pans out. But for a lot of people, it does create an unfairness actually in a sense that if you're an actual employee, you might suffer. If you're the owner of the business, you may in fact be okay.
And the salary sacrifice is something that was pushed by a lot of unregulated sort of tax advice firms over the last 2 or 3 years. So it'd be interesting to know how many sort of smaller employers and things, have literally within the last year or two changed their contributions so that they are salary sacrifice to sort of try and get this thing back and now have to almost immediately revert.
And there is a £2,000
Yeah,
limit, but I,
more
I
than that.
I'm
Yeah.
not sure that's going to impact. I could be wrong, but I'm not sure that's going to impact clients as who clients in the way they might expect. The one that will impact is, and this is quite concerning, is the they trailed this idea of increasing income tax by 1 or 2% and reducing national insurance by the same amount, so that people paying taxes on rent and savings income would pay a closer amount to someone who's employed. Now, of course, the income tax rate didn't go up or hasn't yet, but they have brought an increase not just on the dividend rate of tax, but also on the savings rate. And if we go back long enough, we used to have a situation where we had schedules of income, and I can't remember which was which, but I think rental income was Schedule A, and then bank interest and other such interest was another schedule. And you could have different rates on different schedules. So it's not happened yet, but if we end up in a situation where right, you've got a dividend type of income, you have one rate for dividends, and that's gone up by 2%. It's possible that rental income could end up with a higher rate than bank interest. So they might look at it and go, well, we can squeeze landlords a bit more without punishing those who are, the pensioners who have got some money put aside on which they're earning some interest. I'm not saying that's going to happen, but it's just possible that they paved the way for that.
Yeah. So we should add, Matt, that the chat is open. So if you've got, although everyone is muted, if you've got any questions or anything you want to comment, please just comment in the chat.
What will be important as a result of the increase in the dividend rate is people are going to go and revisit the whole salary versus dividend calculation. So there was, go back far enough, dividends were more tax efficient, and then they basically closed that gap. And then the gap moved out a little bit when the employer's national insurance got increased from 13.8 to 15%. And now they've closed the gap again by increasing the dividend tax rate. But depending on where you are in the bands, it may not actually impact you because you might be in the situation where actually it's more efficient to take it as a bonus overall with corporation tax relief than it is to take it as a dividend. So that's going to be, and it needs to see the tax notice. It not that doesn't come into effect until April 27. And that's kind of typical, right? Because the best way to quickly raise a load of revenue is to announce a fairly substantial tax rise. And as happened when we had the 50% rate, a lot of owner managers will be declaring substantial dividends on the 5th of April 2027 to capture the lower rate. Um,
And this is the fundamental flaw with the way we do these budgets based on the OBR forecast, which is, and it's same with the minimum wage rises, right? They have a massive positive impact on your OBR forecast in the future because you're pushing more tax revenue in above inflation into the in in the short term, and it's the same there. So the OBR report will take into effect the behavioural
yeah.
the behavioural push factor of people will actually pay more tax this year. So you're not basing the budget on your fundamental economic principles and what's
Uh,
good for growing the economy. You're sort of fudging all these things to try and hit that OBR, that magic OBR number.
One thing I was asked when they way back when the rate went to I think 50%, people were very worried about will the revenue come along and say, where's your dividend voucher and your board minute and all that kind of stuff. And the answer to that was no, they never did, because actually they'd rather you paid the tax a lower amount of tax earlier than a higher amount of tax later. They just want the revenue. So I think it's highly unlikely that people that vote the dividends, as often happens essentially after the year end. You don't know what because you don't know what your profits are. So it's quite typical that you've drawn the money out and then the dividend actually gets technically voted later on. But yeah, from April 27. But that's gonna make it yet more painful for owner managed businesses with the overall effective rate. Realistically, at the additional rate, you're looking at an overall effective rate of about 56% if you're paying 25% corporation tax. So often being self-employed is better. And one thing that didn't happen that was trailed was making members of LLPs, of which there are quite a few actually, paying employer national insurance contributions on their own sort of profit shares. But that hasn't happened. So that's where we are. So income tax, so fiscal drag, pension, salary sacrifice, and savings rate. That's really where we are on personal taxes. Um, we better cover wealth taxes, Gus, because wealth taxes was actually something that we've heard a lot about. And actually in Wales, nothing's happened.
No, it's not clear whether it is going to.
No, no, actually, so in Wales, nothing has happened. In England, we've basically got this super council tax.
Yeah.
But just to be very clear, that's in England. It does. I don't know how it would work. I don't know if it could apply in Wales because WRA doesn't have powers to collect direct taxation other than to change the income tax rate. So I don't think Welsh government has the powers to sort of have a super council tax that goes to Welsh government. Whereas this super council tax on English properties worth over 2 million, it actually goes directly to Westminster. If it was to happen in Wales, I think it would be a bit like the double and triple council tax. It would go to the local authority, not to Welsh government. I don't think anything will happen in Wales because I think the administration would probably cost more than they'd raise on properties worth
Well, I
over
was going to say
2 million
how many,
pounds.
yeah, how many properties are worth more than 2 million in Wales? I mean, I think you probably just answered your own
Answer the
question.
question. But I bet you I get lots of calls. Am I affected by this? No, unless your property's not in England.
Yeah, and it creates these things always create a tax creep fear, don't they? So all of a sudden, even though
Yeah,
you own £1 million house, and they suddenly started taxing £2 million house, and all the 1 million people who own £1 million house phone you up and say, when is this going? They all
okay.
start worrying that somehow their house price is going to go up. They're suddenly going to be captured in this bracket, and they'll start asking you, right, how do I avoid this in the future?
Well, there is a precedent for that. I think not in Wales, but in England. I think I can't remember how long ago it was, but they brought in something called ATED, annual tax on envelope dwellings. So if you have the audacity to own a property in a company to try and reduce your stamp duty when you sold it on, all that kind of stuff. It's a bit like a super council tax. And I think I'm right in saying that when it was first introduced, it only applied to properties over 2 million. And now it applies to properties over 500,000.
Hmm.
So you can see how if you do have a second property in England that's not worth 2 million, in 3, 4 years' time, it wouldn't completely surprise me if if they actually brought down that ban, not increased it. Now that could be nonsense, but there is a precedent to it. So the income taxes, wealth taxes, but not the scary wealth tax. Nothing on um, increasing capital gains tax. That's been done already. So, but everyone's been asking me, is CGT going to go up again? No, nothing yet on CGT. Nothing on exit taxes.
That was a
That
surprise. I thought there'd be something there, but
Well, if you're going to do an exit tax, you don't tell people you're going to do an exit tax.
no. Yeah.
If you're going to raise capital gains tax, you tell people you're going to do it because you want them to sell a load of stuff and you want to get some revenue in. If there was going to be a CGT increase, you would probably announce it now and say it'll be effective from April next year. But you would generally not prelude an exit tax because that, gives people the warning. So that's your sort of CGT, that's your capital gains. On the wealth taxes, I don't know if you caught this, noticed this, but we the only good thing that came out is the business relief and agricultural relief allowance is now going to be transferable. Okay, so this is a situation where um, the nil rate band is transferable, the residence nil rate band is transferable, so you haven't got to go do daft things with your will to have the benefit of both of them. But originally, the business relief allowance of 1 million and the agricultural relief allowance was also 1 million. Um, they were not transferable. And people were rushing around thinking, "Oh crikey, I've got to change my will, or I will change the ownership of property." So that's the only change. We were hoping they might increase the allowances. I'm still think there's room there because they don't make any sense. If you've got a 30 million pound business, and let's just say you've used your business relief allowance, you've got 6 million pounds of inheritance tax. That bill is not the companies, it's the executors. So you could be in a situation where to pay that IHT off over 10 years, admittedly without interest, to pay that £600,000 a year, the company has to make 1.3 million, pay £300,000 of corporation tax, pay a £1 million dividend, it's gone up now, isn't it? The dividend tax is now, my numbers are now wrong. It's now like
And
42%.
and
It's extortionate.
it's sort of to your point that they haven't actually published a lot of the specific taxes today, which they normally do. And to that point, is there a sense that there are now quite a few of these type of anomalies in the tax system that we've had a lot of change within the tax system in the last sort of 3, 4, 5 years, however long. Um, and some of the reality of that actually needs sorting out, such as the point you
I
just
think
made.
I think so. I think until they see they see the issues. Like if say that business was worth 30 million and the first couple of years it does the EBITDA, it can pay the dividend, it can pay the tax. What happens if that business declines?
Yeah,
The IHT bill doesn't go down. It's still 6 million. It doesn't make at some point the estate is bankrupt
yeah,
potentially. So I think it won't be until some of these things it's my guess, but I think some of these things will have to happen. That I don't get the sense they really understand what they're doing sometimes, and
yeah.
it's laid bare. They won't understand it. It's got to be really in their faces. Like, oh, well, I didn't think about that.
You do, and I sort of asked the question actually of Treasury once, like, do you have accountants who review these things? Because I do have a view. If you had fewer politicians and economists running these things and more accountants, you do a much better job because accountants tend to understand the real impact and cost of things. And and they they swore that they have a whole team of accountants who sort of look at these things and try and understand it, but I'm not convinced.
I'm
Or
not convinced. I
maybe
remember.
not accountants who have not, if ever, worked in practice, probably.
I think that's probably right because I remember when there was a chap who was at PwC and he went on secondment to the Treasury. God knows why PwC put him on secondment to the Treasury, but they did. And they had no idea how private equity got around paying so much tax. You know, they were literally paying less tax than their cleaners and what they would do with capital gains and basic cost shift. They could basically pay no tax on millions of pounds of
Yeah.
profit. And it wasn't until this chap went on secondment that explained it all to them. Like, really? Is that how it
Yeah.
works? And only then did they change the rules. And even then they were quite generous. They said, well, I'll tell you what, look, it's not, paying zero tax, it's not really on. Would you mind awfully paying 28% capital gains tax? Well, funnily enough, they said, oh, that's better than what I got now from my own and managed business on an effective rate of 57, 56%, maybe 57%. Yeah, you'd pay
Well,
28 over 57, wouldn't you?
and I think, and perhaps that tip, I can't remember if it's Kirsty or someone else who um, dug this out and shared it from the OBR, but there was a comment in there as part of the OBR forecast that the impact of this budget on CT um, over the next 5 years, i.e., the amount of CT paid. So CT would go up amongst bigger businesses who would become more profitable over the next 5 years, 5 year period or 6 years, forget. Um, but this will be offset by a fall in profitability of smaller businesses over the forecast period, which was very worrying and concerning. And I think so that there is someone in there who has figured out that the impact of a lot of this, it has a much higher proportional impact on smaller businesses, all of these changes, than big businesses. Because and especially private equity backed bigger businesses and the sort of consolidators and all those sorts of things. So worryingly, someone in there in the OBR seemed to sort of figure this out, that actually you're squeezing the profitability of small businesses with
Yeah.
all of these things, but been ignored.
And in respect to that, they have committed, I think, to retaining corporation tax, the main rate at 25%, for the life of the parliament. There is this sort of £50,000 kind of small rate, but it doesn't add up to very much, frankly. The only change I've seen in respect of corporation tax or business tax was a change to capital allowances, which is frustrating because they faffed around with allowances so much. It's ridiculously complicated. It's
Yeah,
just unnecessary, and it's actually possibly not as bad as it sounds. They've reduced the writing down allowance from, I think it's 18 to 14%, and we've now gone back to having a first year allowance. But what people have forgotten possibly is that they had already brought in full expensing. So basically 100%. So we used to have this idea where you'd have like an annual investment allowance, but that was like 1 million shared across all your group companies. And anything over that, maybe then you only got the 18%, now the 14%. For a lot of clients, they're not spending more than 1 million quid.
yeah,
We've still got this flipping annual investment allowance, but we've also got full expensing. Well, why do we need why do we need that if we've got full expensing? And it's because of the categories of stuff. So full expensing is essentially for brand new stuff, and it excludes things like cars. So vans are okay. So whilst people will think, oh crikey, I can now only claim 40%. You there's a good for brand new stuff. You can probably still claim the 100%, and you can probably still claim 100% on over £1 million. So I'm not sure that for the OMBs that is going to be such a problem. But it's one of those things that's going to get lots of calls on. And until I see the TIN, because they
yeah,
haven't released it yet, I can't actually confirm exactly what's going on. But I don't think that one for most people is going to be such a problem.
yeah. So I've just dug out this quote. It was Kirsty who sent it. It's from the OBR report this morning. It says that, corporation tax is expected to raise 97 billion next year, an increase of 5.6%. The increase is driven by higher profits in large non-financial companies, offset by weaker performance for small companies. So
Mm.
and that's why I don't. feel too bad about being quite brutal about this budget because the OBR it said itself is saying that this budget effectively does nothing for small business, and small business are obviously our constituency here.
And then that will lead to this horrible phrase of excess profits. And
Yeah.
what does that mean? So you hear it every now and again. Well, these companies are making excess profits. Right? Should there be a will there be a higher rate for these excess profits? And what's an excess profit? But I think for most of our clients, we should hopefully not be impacted by the changes to the allowances, and that at least it will stay at 25% and not get higher.
Yeah.
Um,
I mean, I think they're just forecasting that small businesses aren't going to do very well, whereas big businesses are, because that's the sort of regime that they've
mm.
created.
We probably talk about cars
Sorry, yeah, go on.
because um, we are going to have 3p a mile on electric cars and 1.5p a mile on hybrids from I think 28. But I don't know. Does anyone know how they know how many miles you've done? So I can't quite work that one
Well,
out.
given you don't MOT for 3 years, do you? So obviously they take mileage at MOT, but you're
Yeah.
not. What are you going to do? Estimate for 3 years? People obviously going to try and avoid paying it, and then what? You get a massive bill off 3 years.
Yeah. What
What
have you
if
sold
I
your
don't
car?
know? Yeah.
It's like
So
I
when is that one due to come in
I
to
think
effect?
yeah, April 28th. So maybe
Okay,
they
so they've
haven't worked it
obviously
out themselves yet, which is why they
yeah,
haven't
clearly.
released the TIN. Because they've sort of announced the policy because it's going to raise up, I think, 1.4 billion pounds a year. And I kind of get it because obviously the vehicle excise duty has plummeted because they've been encouraging everyone to go and buy electric. I'm never buying electric. I'm sticking with my diesel because I knew that something that's stupid like this would happen. Um,
Well, I have a theory. If you've ever been to Cuba, where they've got all the American cars from the 50s and 60s are still driving around because obviously they couldn't import cars for 50 years. I have a bit of a theory that you know there's going to be a rush to buy diesel cars over the next few years, and everyone's going to keep them going 20, 30 years. And if you wanted a way to make a load of money, start buying up all of the spare parts for old diesel cars now, store them in a warehouse, and sell them for a fortune in the future.
well, there was a chap who bought up all the old Land Rover Defenders
That's
before
right.
they
Yeah,
stopped
he
making them.
did well for himself, didn't he? I mean, with things like that though, but again, this is where there's no sort of intellectual rigor. Because frankly, if you're going to bring in a charging per mile tax regime for cars, you might as well just do it for all cars. Charge every car the same, and then you get because what's happened over 50 years is all of these changes have been bit here, bit there, and they just over time they create skewed incentives or people to do differently. Um, you know, and it's going to be the same thing here. You've got people sitting down and now trying to figure out, right, what is actually the cheapest way to, for a business to operate a vehicle? Is it an EV? Is it you're just wasting everyone's time trying to game the system.
Yeah, so the other things to cover, not so exciting, ISAs. So there's some of the things that haven't happened that people have asked me about. So we talked about pension salary sacrifice, but the 25% tax-free lump sum is still there. The They haven't softened the IHT rules other than the £1 million becoming transferable. We were really hoping that there were some rumours that the 1 million might increase. There'd been quite a lot of pressure from the NFU, and there was some documents going around that alluded to some softening, but that hasn't happened. Nothing on capital gains tax. So we've got but this smorgasbord, as they're calling it, supposedly raises 24.5 billion by a year by 2030, I think it is.
Yeah, but if you look at the forecast of that, the majority of that tax comes in the last couple of years due to fiscal drag, or a big portion
Yeah,
of it.
8 billion. 8 billion from freezing of the thresholds,
Yeah,
4.7 from pension salary sacrifice changes. Oh, and that's a difficult one to predict because people might just not bother putting money into. I suspect people won't put money into pension if they're accustomed to won't put as much money in. If they're
yeah.
accustomed to getting that tax relief, they might make different choices. The additional 2% tax is
But,
2.1 billion.
and this goes back to my initial point: is that a lot can happen in the next couple of years before we start bringing any of this tax in. And we're still running I think it's a 48 billion deficit next year and 29 billion the year after.
Mm.
So that's another 70 billion of borrowing they've got to heap on over the next couple of years. So they had nothing of what they've done really puts them in a better fiscal position in the next couple of years. So
This,
we're
the
really
predicted
certain that,
surplus was only 3 billion in the last year of the parliament. It wasn't even 3 billion. It was if
yeah,
everything goes to plan, it was a 2.8 billion surplus in the last year of this parliament.
yeah.
It's not
So
much.
again, this comes back to the point of, with everything sort of backloaded and a lot of these taxing and yeah, I think a huge amount of tax increases basically come in effect in 2029, which is due to be an election year, which is just, it's turkeys voting for Christmas doing that.
Mm. So the other ones to mention are I don't ISA allowances. So it's still 20, but it's 12 of that would be shares, 8 cash, unless you're over 65, and then you can put the full 20, as I understand it, into cash.
Yeah.
Which makes sense because if you may not want the volatility. It's a bit like when you're getting to retirement age. If you're going to buy an annuity, you might shift all your pension into a cash or bonds so that you then are
Well,
not exposed to risk, that you can buy your annuity.
I mean, they would absolutely love to have abolished cash ISAs, because they don't do anything for the economy and they don't do anything for the treasury.
Yeah.
But there was massive, massive lobbying that cash ISAs um, effectively prop up low mortgage rates. Now, I'm not convinced whether, I'll be honest, whether that was a lot of um, bank lobbying, but because effectively reduces the capital reserve that banks have because they wouldn't have so much cash on deposit.
Yeah.
I'm not convinced by that argument. But essentially, so they've come up with sort of a happy medium
Yeah.
that the banks are happy with. Um,
I did read how many billions there are in cash ISAs, but I don't recall
there was 103 billion was put into cash ISAs last year.
in one year.
No, it's an insane amount, and I suspect that is 20% of the population or whatever it is who
Mm.
are putting that money into ISAs every year. If you put into your ISA every year since they were um, first launched, I think in theory, you'd have an ISA worth over £1 million now. So you've got £1 million sitting there out of the reach of the tax man.
Other couple of things. So business rates. I don't really understand business rates, but we're going to lower the multiplier for hospitality and leisure, but then increase it for higher value properties. So I think the idea is to make it easier for the small pub, and Weatherspoons will still be hit. Um,
Was that sorry? Was that's England only still at the moment, isn't it? Because it's devolved issue here, so we
yeah,
don't
I
actually
would
know
think
what they're
so.
doing in Wales yet.
Yeah, I should think that's England only. And the other change potentially of note is EOT, so employee ownership trusts, where you could, up until yesterday, sell your business to an EOT for zero tax. And it was being abused, in fairness. I'm not seeing the TIN, hasn't been released yet, but that would be 50% relief. So I don't quite know how that's going to work. I think that must mean that if you do it after April, you would have the first 1 million would be at 9% effectively, and anything over the million business asset disposal relief allowance would be half of the 24%. So it's really quite generous, but not anywhere near as generous. I think what would be quite interesting is when you have to pay the tax, because with an EOT sale, you're not having it funded all on day one. Is a lot of deferred consideration. So it'll be interesting to see whether the tax can be paid over installments, or it could be more problematic than just a change in the rate. And gambling duties, but don't really know much about. I think that went up substantially, like 10 to 25% on online gambling, but slashed on bingo halls or something. So but a significant number, a billion raised. I think that was it. I think I've covered. I don't. If I
I
haven't, if
think
I've missed anything, someone must ask a question.
well, the one other thing that is obviously there's a lot of and there is quite a bit in the budget, but I did read through it, but it's a little bit unfathomable by the time I got to it, is around the industrial strategy. So that the government is looking to support these businesses in these 8 sectors, which is advanced manufacturing, defense, creative industries, professional services. tech and digital. Um, I'm gonna have to. I'll remember off the top of my head, but there's a bunch of stuff around sort of reliefs and grants and various other things for those industries. But it is quite complex, and it's not very clear how some of that is gonna feed through. So the one bit of I think that they're saying is you know is this is what we're doing to support businesses. It comes through the industrial strategy. Now, again, it's a little bit complicated here in Wales because some of it's devolved, some of it's not devolved. They make these announcements in Westminster, they apply to England. Wales has to figure out its own plan. Is it going to follow England's? Is it going to do things slightly differently? Who is the granting body? Is it local authorities, Welsh government? It and the one issue that I've sort of raised with these is that these are all designed by in conjunction with the big the BAE systems and the Airbuses and the PwCs and the likes who sort of sit down and say, well, this is what we need. This is sort of support we want for our industries. Um, but I'm not convinced that it is easily understandable or accessible to smaller businesses at the moment. And that's something I've fed back. So there is money in this budget for grants and reliefs, and potentially I think some changes to some of so it's grants and relief, particularly for R&D and some other stuff. But the devil will be in the detail, and we just don't have that detail yet. But it's something we want to watch closely because they can announce grants, and by the time some businesses find out, they could have gone, etc. So um, there is something to sort of watch out for there if you're in one of the ISA industries. So it's worth having a look up the industrial strategy and see
Yeah.
if that does impact you.
There are some things yet to be released. That reminds me, there's one thing I completely missed, which is doubling the enterprise investment scheme and venture capital trust allowances. So these are the
Yeah.
amounts that companies can raise and how much individuals can invest. That they've always been quite generous. I've never, I've once to come across a situation where the company could have raised more than the limit. But what's I had picked up on is that it might affect a few people is that at the moment you get a 30% tax reducer on EIS and VCT. VCT is a sort of an EIS is like will be one company, and VCT would be like hedging your bets and having a little fund of qualifying companies to sort of spread your risk. Weirdly, dividends from EIS companies are taxable, but dividends from VCTs are not taxable, which doesn't really make any sense. What they've done is reduced the income tax reducer on VCTs to 20%. So now when you're making the investment, your single company higher risk, if you like, is more tax generous than your lower risk VCT. And that supposedly makes it a bit fairer because one you pay tax on the dividends and one you don't. Now, I've never seen an EIS company pay dividends.
That's true.
I've
And
seen lots of them go bust.
yeah, and I think I'm right in saying we've certainly got one of, if not the most generous, EIS EMI tax systems in the world. I think it's sort of certainly up there. The I think the problem has been that for the last sort of 22 years, we haven't built up the ecosystem of sort of angel investors and people. And part of the big reason for that is everyone has stuffed their money in pensions and ISAs. It's the tax benefits you get from sheltering your money away from the tax man in one of those tax wrappers sort of outweighs any of these EIS. So I think it's slightly different in the States where you can invest in these things from your 401k. So you effectively, rather than having these schemes, you can just invest in them from these tax wrappers. And I thought they might sort of start looking at thinking about doing something there because the scheme is not the problem. It's a very generous scheme. The problem is we don't have enough people investing in risk capital in startups, and particularly in Wales.
We've got some helpful questions that not everyone can see them, but we can.
Yeah.
So I'm gonna deal with some of these
Sorry,
because
yeah,
actually
let's do.
one of them I hadn't thought about. So one of them is about I think it's about inheritance tax, and there was rumors of the 7-year PEP being pushed out to maybe 10 years. And there's
Yeah.
also quite a generous exemption where if you gift your surplus income, it's not even on, it's completely exempt. It doesn't matter about the 7 years. So and that gift out of surplus income can be really quite generous. I think I submitted I actually returned the other day where grandmum had a very nice pension and just gave it all away. and we could quite easily demonstrate that it was surplus and therefore was completely outside of IHT. But it was hundreds of thousands of pounds over a 7 year period, and no inheritance tax. I've seen nothing on that.
No.
I've got a list of the tax notices. I don't. There, I've got several on inheritance tax. I've got one on agricultural property relief. That will be the transferable 1 million, I think. There's one on infected blood payments, unused pension funds, and that's how you pay the tax. One on thresholds. I think that's just them being frozen again. I've seen nothing on gifts out of surplus income going or the rule on pets being pushed out from 7 years to something like 10 years. So that hopefully is good. In fact, we've seen very little actually on inheritance tax, even but actually it's working, right? IHT receipts are going to be like 12 billion in a couple of years' time. It's 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 moving it went from a tax that was quite insignificant to really quite a significant tax.
Yeah, it was sort of 400 million a year or something not that long ago, wasn't it?
It wouldn't have been that long, no.
Yeah.
There is also a question, and I don't I have seen this, but I can't remember what the limits are because I haven't. There's again the notice isn't there, but EMI. So EMI is a situation where you can grant very tax favored options to employees to incentivize them. So, if you've got a business that's worth, say, 1 million quid and you want to give them 10%, you can give them an option typically to buy that 10% that's worth £100,000, but you can give them an option to buy it probably at £25,000 discounted. And they haven't got to pay any of that money until you sell the company. When they never have to find the money. It just sort of goes around in a circle. But the cap has forever has been £250,000 of options. It's a bit more complicated than that because there's this thing called the UMV and the AMV. I won't go into it. So just make sure you don't think it's 250 exactly. It's more complicated. That's gone up. I actually don't know what's gone up to. I can't remember, but that could be it's ridiculous. It's been 250 for such a long time. So it's well overdue that limit's increased. Um, there's another question. I don't know the answer. Is R and I don't do R&D personally. R&D advanced assurance. So, could it work better? It's got to work better because it's been in a complete disgrace the way that the HMRC R&D tax team have dealt with R&D inquiries. It's like they should be ashamed of them. They should be literally ashamed of themselves and possibly they're now listening to, look, you can't carry on like this. No one's going to take us seriously as a country where you'd come to base your R&D when you handle inquiries like this. So that will be interesting to see how that pans out and whether it improves customer experience. To be fair, HMRC are generally pretty good with handling statutory clearances. So you can do a statutory clearance for a transaction. You're selling your company, you want to be sure you're going to get capital gains tax treatment. You can send in your clearance, and they're normally pretty good at answering in 30 days. I generally find they are mainly sensible, and if they don't understand something, whilst they won't talk to you, they don't like speaking to you, but they will react, they will respond quite quickly on emails. Um, the only problem I find is they can't do math. They can't understand the value before and the value afterwards, and so you have to um, treat them like children sometimes, and make it all very, very simple for them.
Well, speaking of HMRC, and we sort of we shouldn't have missed this, but one of the biggest tax increases that goes into the OBR forecasts and has done for the last 3 years is increased clampdown on tax avoidance, which I think was I think it was the third biggest sort of tax number in the OBR was around 4 billion of increased compliance. And I think last year it was 5 billion, and I think a year after COVID it was 7 billion or something like that. I'm not convinced those numbers have ever been met, but it's one of those easy ways of trying to stuff the OBR if you're off by a few billion. So that basically your 3 billion variance, your headroom at the end is HMRC going to clamp down on tax avoidance by 3 billion over the next couple of years, and how they're going to do that. So we've heard a lot around them using AI, changing their systems, and sort of clamping down on those businesses that are avoiding paying tax. I don't know that we've seen much evidence of what they've done this year in terms of who they're clamping down on or investigations. Um, we obviously don't see a lot because all of our clients have good tax accountants.
Yeah, you should hope so. One of the questions has actually been answered, so I didn't. So the EMI limit it's doubled, which is there's a surprise. It's gone from 250 to £500,000, and then the limits have also increased for the qualifying status of the company. But so that's the gross assets and the total shares under share option. One of the more helpful ones actually is currently it's 10 years that before the options have to be exercised within 10 years. And it's amazing how many times that doesn't happen, and you end up re-granting the options but a higher value, which is not fantastic. And that's gone to 15 years. So that actually, I don't know if that will be, I wonder if that 15 years will apply to ones that have already been granted. You'd hope so. Be ridiculous that it wouldn't apply to ones that are coming up to the end of their 10 years. You'd think they should be extended by the 5 years rather than just options that are granted from today or from the 6th of April. There's also there's a number of notes that have yet to be released that I don't know how how important they might be, but for example, capping inheritance tax trust charges for former UK domicile residents. Until I see that, I'm not going to talk about it. But there's a number of things that until we
There's a
see
few
them,
things out there. There's consultations to be
yeah.
published and a few other bits and pieces, isn't there?
I
But yeah,
suspect there'll
I
be
mean,
more stuff that that will come out over the next months as they start to release these notices.
yeah, and look, I think what we've learned over the last 50 minutes is that again, this situation where some of these will affect some people, won't affect others. Potentially, businesses have to do things differently, and that comes back to my starting point. The fundamental problem of this is that everyone has got to sit down, trying to get a head around this and say, does this impact me? Does this change anything? And it's not, it's not. It's never quite a straightforward answer. And I just don't. I think it all of this just adds up to one big headache for everyone.
Yeah, especially me.
You enjoy it though, is the difference.
And we have to hope that the Chancellor's not coming back for yet more tax rises in
Well,
as soon
as
as
I say,
Easter.
it'll be interesting to see what the pressure is to the media on that. They're gonna repeatedly ask that question over the next few days. Do you promise you're not going to come back and ask for more tax next year? And I just, you know, the issue is no longer. It's not NI. It's not tax. It's not other thing. It's business confidence at the moment. And I just, and look, I hope it's good for all of our businesses that business confidence raises a little. So hopefully there will be a little bit of movement, after this in terms of business spending and investment and things. But I'm sort of a little bit cynical today. But maybe that's just because I do have a headache from reading all those documents. All right, that probably brings us to the end.
Yeah,
Then
just check there's no more questions.
I do. Someone did say that the rest is politics. So Rory and Alistair went live at 4 o'clock today. So all of those who joined us rather than that podcast, thank you very much for your time. I hope you found it interesting.
Yeah, and we could have done this before the budget.
Quite probably, yeah.
We could have done this was they were after they'd leaked everything. Oh, it was released everything accidentally. So yeah, thank you
I
everybody.
mean,
That's
the one final thing I don't know, did you actually watch the scenes and it just the behavior of our politicians. It,
shocking.
it's just you'd get kicked out of Wetherspoons if you behaved the way they sort of behave in the House of Commons. And I don't think it does anything for anyone's respect or sort of belief in politicians to see grown men and women behaving like that.
Quite agree.
That's my final thought. All right.
Right.
Thanks,
Thanks
Matt. Thanks
everybody.
for joining
Thanks for
everyone.
joining us.
ta